Welcome back to the MbaguMedia Finance Podcast. Today, we're diving deep into a topic that's crucial for understanding the long-term trajectory of the crypto market: infrastructure-first blockchains. We'll be exploring why these foundational projects, like LiquidChain, ticker symbol $Liquid, are so important, especially as we look towards the next potential bull run around 2026.
That's right. It's easy to get caught up in the hype and price surges, but the real engine of crypto's value lies in its underlying infrastructure. History shows us that every major bull run is preceded by a period of intense development and refinement of this foundational technology. It's during these quieter times that the rails for future innovation are actually built.
Exactly. And the key takeaway here is that profitable positioning isn't about chasing the current trend. It's about diligent research and identifying projects that are quietly building the essential components for the next generation of decentralized applications. This means looking beyond the immediate price action and scrutinizing the technology, the teams, and the long-term vision.
And that's precisely where LiquidChain, or Liquid, seems to be positioning itself. Its development and emergence from this infrastructure building phase appear to be perfectly timed with the anticipated build-up to the next bull run. We're seeing a clear shift in the crypto space away from pure speculation towards a demand for tangible utility and functional blockchains.
So, what does it mean for a project to be perfectly set up? It implies a confluence of factors, a strategic alignment with market dynamics. It's about understanding historical patterns and identifying projects that are poised to benefit. We're not talking about fleeting hype here, we're delving into strategic positioning grounded in how the crypto market has evolved.
And understanding the cyclical dynamic is absolutely key to grasping why Liquid might represent such a compelling strategic play for the anticipated market resurgence around 2026. Let's start by breaking down the technological bedrock, the core infrastructure components that make a blockchain truly viable for mass adoption.
Absolutely. When we talk about infrastructure, the first thing that comes to mind is scalability. In today's fast-paced digital world, a blockchain that can't handle a high volume of transactions quickly and cheaply is simply not going to cut it. High transaction throughput and low fees aren't just nice-to-haves, they are absolute prerequisites for real-world applications.
That's so true. If it costs too much or takes too long to send a token or execute a smart contract, adoption will inevitably falter. LiquidChain's architecture is designed with scalability at its core, aiming to provide those high transaction speeds and negligible fees that are essential for everyday use cases. Think of it like a multi-lane superhighway compared to a congested city street.
Precisely. Liquid is engineered to be that superhighway, capable of handling the demands of a growing user base and an expanding array of decentralized applications without getting bogged down. But speed and cost aren't the only factors. A blockchain's utility is also deeply tied to its ability to foster innovation through efficient smart contract capabilities and developer friendliness.
Developers are the architects of the decentralized future, and if they find a platform difficult to work with, or if its smart contracts are cumbersome, innovation will be stifled. LiquidChain aims to provide a robust yet accessible environment for developers, making it easier to deploy dApps and experiment with new functionalities. This ease of use is crucial for attracting talent and building a vibrant ecosystem.
Another critical aspect is interoperability. The crypto space isn't a collection of isolated islands, it's an interconnected web. A blockchain that can seamlessly connect and communicate with others, facilitating the flow of assets and data across different networks, is far more valuable than one that operates in isolation.
And this is where the liquid metaphor for LiquidChain becomes particularly insightful. It speaks to a design philosophy centered on creating a fluid digital economy, where assets and information can move effortlessly between different parts of the ecosystem. The name isn't just a catchy moniker, it reflects a core design principle of enabling seamless asset and data flow.
That fluidity is essential for creating a truly integrated digital economy where users and applications can interact without friction, regardless of the underlying blockchain. And, of course, none of this technological prowess matters if the network isn't secure. Robustness against attacks is a fundamental prerequisite for building trust.
Absolutely. Users need to be confident that their assets and data are safe. LiquidChain's security architecture is therefore a critical component, designed to protect the network from malicious actors and ensure its integrity. This foundational layer of trust is paramount for any blockchain aspiring to widespread adoption.
Furthermore, true decentralization is the bedrock of blockchain technology. Examining node distribution and the consensus mechanism is key to understanding a network's resilience and its resistance to censorship. A highly decentralized network is inherently more robust and aligned with core blockchain principles.
LiquidChain's commitment to decentralization depth ensures that it can withstand pressures and remain a truly open and accessible platform. Ultimately, these technical underpinnings are the practical enablers for the next wave of crypto utility, moving beyond niche applications to integrate into the fabric of our digital lives.
This robust technological foundation is precisely what positions LiquidChain to capitalize on the evolving demands of the market. But technology alone isn't enough, right? A blockchain needs a vibrant ecosystem to truly thrive.
Exactly. A blockchain, no matter how advanced, is only as strong as the ecosystem it supports. It needs a chassis, wheels, and a driver, essentially, applications, developers, and users. This is where strategic partnerships and community building become paramount for projects like LiquidChain.
Identifying key collaborations that drive adoption and integration is crucial. These aren't just vanity partnerships, they are collaborations that unlock new use cases, bring real-world assets onto the chain, or connect the blockchain to existing industries. Think of it like building a new city. You need businesses, homes, and people to make it a living community.
LiquidChain's strategic partnerships are designed to foster this kind of organic growth, integrating its technology into various sectors. Equally important is fostering a strong developer community. This involves providing the tools, documentation, and incentives for developers to build on the platform, creating a fertile ground for new ideas.
Developer grants, hackathons, and educational resources all contribute to cultivating an active developer base. Moreover, a focused approach to specific verticals can accelerate adoption. Instead of trying to be everything to everyone, projects often find success by targeting particular industries where their technology offers a distinct advantage.
This allows them to build deep expertise and gain traction within a specific market before expanding. The quiet phase we discussed earlier is precisely when this utility is being built, not just discussed abstractly. It's about the concrete development of real-world applications that drive adoption.
A particularly exciting area for many blockchains, including potentially LiquidChain, is bridging the gap between traditional finance, TradFi, and decentralized finance, DeFi. This involves creating mechanisms that allow traditional financial instruments and assets to be integrated into the blockchain ecosystem, unlocking immense value.
The concept of real-world asset tokenization is a prime example of this integration. Imagine tokenizing anything from real estate and art to commodities and intellectual property. LiquidChain's architecture, with its focus on scalability and efficiency, could be well suited to handle the complex processes involved in tokenizing these diverse assets.
The name LiquidChain itself, with its implication of fluidity, hints at a design philosophy aimed at enabling seamless asset and data flow across different networks. This interoperability is a strategic imperative for creating a truly interconnected digital economy where value can circulate without friction.
In essence, a strong technological foundation needs a vibrant, growing ecosystem to translate into widespread adoption. This adoption, in turn, fuels the narrative and market momentum that characterize a bull run. LiquidChain's efforts in ecosystem development are integral to its strategy for capitalizing on the next wave of crypto growth.
Now, let's pivot to the narrative advantage. How does a project like LiquidChain position itself to capitalize on the cyclical nature of crypto markets, particularly for an anticipated 2026 bull run? The key lies in understanding how market sentiment shifts.
We move from periods of skepticism and apathy to phases of intense enthusiasm and FOMO. This shift isn't random, it's often triggered by tangible signs of adoption and utility. What concrete indicators will signal the start of the next bullish phase? It's not just rising prices.
It's about metrics that demonstrate real-world usage, a significant increase in developer activity, a surge in dApp usage, growing transaction volumes, and successful integration into mainstream applications. These are the signals that build confidence and attract broader interest.
LiquidChain's development story, from its inception through this quiet phase of infrastructure building, aligns perfectly with this infrastructure-first thesis. While others may have focused on short-term gains or speculative narratives in previous cycles, Liquid has been laying the groundwork. It's not chasing a bull run, it's building the foundational elements for one.
This distinction is crucial for the pre-bull run investor. Timing is everything for maximizing gains. Investing in projects that have already experienced massive price appreciation during a bull run is inherently riskier and offers less upside potential than identifying and supporting solid infrastructure projects during their development phase.
Furthermore, this strategy helps in avoiding the pitfalls of the hype cycle. Speculative bubbles are characterized by rapid price increases driven by irrational exuberance, often detached from any underlying utility or fundamental value. Projects that focus on building genuine utility and robust infrastructure are more likely to weather market downturns.
Implicitly, this positioning contrasts with projects that may have peaked in previous cycles. Many blockchains that were prominent in earlier bull runs struggled because their underlying technology couldn't scale or adapt to new demands. LiquidChain's focus on next-generation scalability and interoperability aims to avoid this fate.
The quiet development period, where a project like Liquid has been building its technology and ecosystem without the intense spotlight of a bull market, also serves as a de-risking factor. Projects that successfully navigate bear markets and continue to build are often more resilient and have stronger foundations.
Therefore, the combination of robust technology, a strategically cultivated ecosystem, and this opportune timing creates a compelling narrative for LiquidChain's potential in the 2026 crypto bull run. It's a story of building for the future, a narrative that resonates with the evolving maturity of the cryptocurrency market.
Now, let's delve into how a project like LiquidChain actually captures value and translates its technological strengths into tangible benefits for its token holders. This is intrinsically tied to its tokenomics, and understanding the utility of the Liquid token is key.
Exactly. We need to examine its utility. Is the token used for staking, governance, paying transaction fees, or accessing network services? A token with clear and compelling utility is more likely to see sustained demand as the network grows. If Liquid is required for staking or governance, its demand is intrinsically linked to the network's health and activity.
This creates a self-reinforcing loop. A more active and secure network leads to greater demand for the token, which in turn incentivizes more participation and security. Network effects are another critical factor. As more users and dApps join LiquidChain, the value of the network increases for everyone, creating a virtuous cycle.
This exponential growth is a hallmark of successful platforms, and the Liquid token is positioned to benefit as these network effects take hold. The potential for institutional adoption also plays a significant role. Large financial players require robust, secure, and scalable infrastructure.
Features like high transaction throughput, strong security protocols, and clear regulatory compliance pathways can make a blockchain like Liquid highly attractive to institutional investors. Investing in infrastructure is a bet on the future of the digital economy itself, not just on short-term price fluctuations.
Of course, no investment thesis is complete without a thorough risk assessment. What are the key challenges and potential headwinds? This could include intense competition from other Layer 1 blockchains, evolving regulatory landscapes, potential technical hurdles, or slower than expected ecosystem growth.
Acknowledging these risks is crucial for a balanced perspective. When comparing Liquid to other assets, it's worth considering its position relative to other infrastructure projects that may have been overlooked or undervalued. Perhaps they were too early, or their narrative didn't catch on in previous cycles.
Liquid's current positioning, building diligently through a bear market with a clear focus on scalability and adoption, might offer a unique opportunity for those seeking undervalued infrastructure plays. Looking towards the 2026 horizon, the impact of continued development, coupled with the natural ebb and flow of crypto market cycles, suggests significant potential.
If LiquidChain continues to execute on its roadmap, foster ecosystem growth, and capitalize on the increasing demand for functional blockchain solutions, it could be well positioned for substantial appreciation. This is where the real value capture happens, through sustained utility and growing network demand.
One of the most compelling aspects of LiquidChain's current positioning is its development trajectory through what is often termed a bear market or a quiet phase in the crypto cycle. This period tests resilience and long-term viability.
Projects that can continue to build, innovate, and expand their ecosystems during times of low market sentiment are often the ones that emerge strongest when the market turns bullish again. The narrative around Liquid has been one of steady, foundational development rather than chasing transient hype.
This deliberate approach has several de-risking implications. Firstly, it suggests a team focused on building sustainable technology and utility, rather than quick profits. This is a hallmark of projects that aim for longevity and real-world impact.
Secondly, by building during a bear market, LiquidChain has likely avoided the unsustainable valuations and inflated token prices that often characterize bull market frenzies. This means the current valuation, if based on tangible progress, may represent a more grounded entry point.
Furthermore, projects that successfully navigate bear markets demonstrate operational robustness and adaptability. They've likely encountered and overcome technical challenges, refined strategies, and built a core community of dedicated supporters who believe in the long-term vision.
This resilience is critical for any infrastructure project aiming to support a global digital economy. The historical pattern in crypto shows that the most significant gains are often made by those who identify and invest in strong infrastructure projects before they capture mainstream attention.
LiquidChain's current phase of development fits this profile perfectly. It has been meticulously building its technological capabilities, fostering its ecosystem, and establishing its presence while the broader market may be distracted or disengaged. This allows for strategic positioning ahead of the anticipated next bull run.
The success of such a strategy hinges on the project's ability to continue executing its roadmap, deliver on its promises of scalability and interoperability, and attract a critical mass of developers and users. By focusing on these fundamental drivers of adoption, LiquidChain is building the infrastructure for the future of decentralized applications.
This quiet, persistent development through market cycles is, in essence, a powerful de-risking factor, signaling a commitment to long-term value creation. Now, looking ahead, the confluence of LiquidChain's robust technological foundation, its strategic ecosystem development, and its opportune timing presents a compelling case for its potential in the anticipated 2026 bull run.
The cryptocurrency market is maturing, and with that, there's a growing demand for solutions that offer genuine utility, scalability, and seamless integration. LiquidChain appears to be meticulously engineered to meet these evolving demands. Its focus on high transaction throughput and low fees addresses critical scalability bottlenecks.
The emphasis on interoperability further positions it as a foundational layer capable of connecting disparate parts of the burgeoning digital economy, embodying the essence of its name, fluidity. The narrative surrounding Liquid is shifting from mere technological potential to demonstrable progress.
As more developers build on the platform and more real-world applications are launched, the intrinsic value of the network and its native token, Liquid, is likely to increase. This is precisely the kind of adoption-driven growth that is expected to fuel the next major market cycle.
Moreover, the project's strategic approach to partnerships and community building is crucial. By fostering collaborations that unlock new use cases and by creating a developer-friendly environment, LiquidChain is laying the groundwork for a vibrant and self-sustaining ecosystem. This organic growth is far more sustainable than growth driven purely by marketing hype.
The potential for institutional adoption, driven by the need for reliable and scalable blockchain infrastructure, cannot be overstated. As more traditional financial players enter the digital asset space, projects like LiquidChain that offer robust security, high performance, and clear utility will be in prime position to attract significant capital.
While challenges and competition remain, the fundamental strengths of LiquidChain, its technological architecture, its ecosystem building strategy, and its strategic timing position it favorably. It represents a bet on the future of decentralized infrastructure, a future where blockchains are essential components of the global digital economy.
The quiet development phase has been about building the engine. The upcoming cycle will be about demonstrating its power and utility to the world. Ultimately, LiquidChain, Dollars Liquid, presents a compelling thesis rooted in the fundamental patterns of crypto market evolution. It's a strategic consideration for those who understand that true value is built during the quiet phases.
It's about investing in the infrastructure that will power the next generation of decentralized innovation, potentially positioning Dollars Liquid as a cornerstone of the future digital economy. This brings us to a summary of our discussion, looking at the key factors, strengths, and challenges.
Let's break down the summary table. First, under market cycles and timing, a key strength is that crypto markets move in predictable cycles, and the biggest gains are realized by investing in foundational infrastructure projects during the quiet build phases before the next bull run. LiquidChain's development aligns with this pattern, potentially positioning it for the 2026 cycle.
The challenge here, of course, is that accurately predicting the exact timing and magnitude of market cycles is difficult. External macroeconomic factors can influence market sentiment and adoption rates, potentially delaying or altering the anticipated trajectory. Moving to technological infrastructure, the strengths are clear: scalability, efficient smart contracts, developer friendliness, robust security, and true decentralization are critical for mass adoption.
LiquidChain's architecture is designed to meet these needs, acting as a high-performance digital highway. However, the challenge is that the blockchain space is highly competitive, with numerous Layer 1 and Layer 2 solutions vying for dominance. Continuous innovation is required to maintain a technological edge and adapt to evolving industry standards.
Under ecosystem development, a major strength is that a strong ecosystem of dApps, developers, and users is essential. Strategic partnerships, developer incentives, and a focus on real-world utility drive adoption and create network effects. LiquidChain's efforts here are integral to its strategy.
The challenge is that building a vibrant ecosystem requires significant time, resources, and effective community engagement. Attracting and retaining developers, as well as onboarding new users, are ongoing challenges that require consistent effort and innovation. For tokenomics and value capture, the strength is the Dollars Liquid token's utility, staking, governance, fees, which is key to capturing network value.
Strong utility creates sustained demand, especially as network effects grow and institutional interest increases, positioning Dollars Liquid as a core component of the digital economy. The challenge lies in ensuring the tokenomics model effectively aligns incentives and captures value as the network scales. Evolving regulatory frameworks can also present hurdles.
Finally, under narrative and market sentiment, a key strength is the shift from speculative hype to utility-driven adoption. LiquidChain's focus on building during bear markets, de-risking, and delivering tangible solutions positions it to benefit from the next wave of market enthusiasm, driven by real-world usage metrics.
The challenge here is overcoming the legacy of past market cycles and differentiating from projects that failed to deliver. Effectively communicating the project's long-term vision and value proposition to a broad audience is crucial for capturing market attention. This has been a deep dive into LiquidChain and the importance of infrastructure in crypto.
Indeed. It's a reminder that the most significant opportunities often lie in understanding the foundational layers that support future growth. Thank you for joining us on MbaguMedia Finance today.